Amazon is already one of the largest companies in the world, and I believe this may be the best growth stock you can buy right now that is going to absolutely explode over the next few years. Amazon is already incredible. They are the market leader in the e-commerce space, and we all know them for this platform. The Amazon mobile app and their desktop site absolutely dominate all across North America. But if we take a look at this company, shares are up more than 80% this year, and the company currently trades at $3,200 per share. They have a market cap at $1.62 trillion, but I believe they can surpass $2-3 trillion over the next decade. This company is actually on a pullback right now, and if you take a look from their most recent high at over $3,500 per share, the company is down close to 9%. So Amazon is on a small pullback as of late, and in this video today, we're going to go over the reasons why this company can grow and reach record highs. We're going to take a look at some future growth expectations for revenue and earnings, some price targets, but we're also going to deep dive into some other factors of their business away from the traditional e-commerce platform that's going to allow them to expand and actually grow their market dominance in new areas. We're going to take a look at some of their future products, such as their new self-driving taxi service they plan to launch, their new online pharmacy. This company's even expanding into grocery stores. They're doing absolutely everything and want to take on every single company on the market. They even have a new streaming service coming out called Luna. So there's so many different aspects of Amazon business that people aren't really aware of right now that we're going to discuss in today's video. I think Amazon, although they've seen a huge run up this year, has so much room to climb even higher, and this may be the best, safest, and strongest growth company you can buy into right now. If you're new to the channel, everyone, I am the Gen Z investor, and every single day we talk about the stock market. We go over different stocks you can buy and sell, and in this video, we're discussing Amazon, the e-commerce giant, the retail killer, everything they get called. This is a big, bad company that I believe is only going to expand for many years down the road. So please hit the like button, subscribe to the channel for daily videos about the stock market, and let's deep dive into Amazon and go over potentially the best stock you can buy right now. Amazon's e-commerce platform is already growing at a rapid rate year over year, and over the past 5 years, back to 2016, they keep controlling more market share as time goes on. Back in 2016, it was estimated that they controlled 34% of the e-commerce market in North America, but over the past 5 years, they have been growing, controlling more of their market as time goes on, and it is estimated that at the year end of 2020, they will control 47% of the total e-commerce platform within North America. And overall, over the next calendar year into 2021, it's estimated that they will dominate 50% of the market, which is absolutely incredible to even think about. We all know how large they are. They're $350+ billion of total revenue, which we'll take a look at later on in this video. But the fact that they're controlling close to 47 to 50% of their market is absolutely incredible. And owning companies that dominate their respective industry like Amazon is doing can reap great rewards for your portfolio. Now, if we take a look at some key financial stats, you can see that Amazon is having some nice results. Profit margin only comes in at 5% right now, but for many years, the company was not focused on profitability. They were just worried about expanding at a fast rate. I think now as they shift their focus to actually earning some profits, this profit margin will grow over time. They have beautiful return on equity coming in at just under 25%, and this is where the great stats come in. Over their latest quarter, the revenue grew 37% year over year, and quarterly earnings grew close to 197% for that same quarter. So like I mentioned, they are kind of focused on a little bit more on profitability as of late, and you can see that close to 200% growth in year over year earnings. The company also has over $68 billion of cash on their balance sheet, so they have a ton of cash left over to reinvest, grow operations, and they can really make a lot of smaller acquisitions if they plan to expand that way. Now, if we take a look at some analyst reports for the company, over the next year alone, in the next 12 months, we're expecting around 18% share price growth, which again would put shares around $3,800 from where they sit today at just around $3,200, a nice upside potential. If we take a look at the buy rating, it is considered a buy, 18 strong buys, 29 buys, and only 3 holds, and no one is selling out of Amazon right now. I don't understand why you would when they're only continuing to grow at a crazy rate. If we take a look, 18 strong buys, 29 buys, 3 holds, I think this company is actually considered a strong buy in my own personal opinion. If we take a look at future annual revenue expectations, To close out 2020, we're expecting total annual revenue growth of over 35%. And for the next calendar year of 2021, we're expecting 60% total revenue growth from this group of 45 analysts. So overall, Amazon is only expected to grow and expand at a massive rate. And for a company bringing in around $380 billion of revenue, a 60% growth rate, bringing up to that $488 billion expectation on the high end would be absolutely incredible. And taking a look at another group of analysts from Yahoo Finance, they once again did 45 analysts. For 2021, these analysts were expecting sales growth of 18%, but I think Amazon will surpass that. I don't know if they'll hit that average of 60 from the first report, but I think they'll maybe hit in the middle. I think we can expect another 30 to 40% sales growth over the next year, like we saw in the current year of 2020. Overall, from Yahoo Finance, they rate this company a strong buy. If we take a look, they come in at a 1.7, which is considered the dark green as a strong buy rating. And the average price target is actually very similar to the first report, coming in at $3,817 per share. So significant upside to where we expect the share price to be over the next year. Now, if we take a look at their income statement, they bring in a ton of revenue like we've already seen. And going forward, that revenue is only expected to grow. Back in 2015, the company brought in $107 billion of total revenue. And fast forward to the past 12 months, 5 years later, they brought in $347 billion of total revenue. They generate some of the highest revenue levels in the entire world. And overall, you can see this company is not expected to slow down anytime soon. Now, if we take a look at their bottom line, you can see what I mean when they started to focus a little bit more on profitability. Back in 2015, they brought in over $100 billion of total revenue, but only $596 million of net income. But as time goes on, you can see net income has been improving and up to over $17 billion of net income over the past year. So they've done a beautiful job of growing. I think Amazon will continue to grow. And now we're going to focus on some of the reasons and some of their plans for expansion outside of the traditional e-commerce platform. I think they're going to dominate in almost every industry. I don't see any other companies that can really stop them. And I think their overall platform, from Alexa, from their other online digital services, is really going to set them apart. And this must be really a must-holding for your portfolio. Now that we've already gone through Amazon's financials and the actual e-commerce platform growth, we're going to take a look at what I believe is the more important aspect of the business, which is their diversity. The fact that they are entering into so many different markets under the Amazon umbrella. So if we take a look at this picture here, this is an older version, but it gets the point across very nicely. Amazon is the center, the main company, the main hub, the stock that you could buy in today. And of course, they own and operate all of these subsidiaries in green. And all of these companies that they own and operate directly compete with other companies on the market right now. And I think that's what's going to help them apart, because they're going to dominate in much more than just e-commerce. Right here, you can see Amazon.com is only one small chunk of the entire business that Amazon plans to operate over the long term. So right now, if we take a look at it, in gaming streaming, that's a growing industry. Video games are taking off in popularity, and Amazon owns Twitch, one of the market leaders for video game streaming platforms. And of course, they compete with other platforms like YouTube Gaming and a Facebook-based platform, Mixer, that actually got shut down earlier this year. They also have Amazon Pay to compete with Google Pay. They have their own logistics services to compete with FedEx and many more all across the world. Another fast-growing one is Amazon Web Services to, of course, compete in the cloud storage space from Microsoft Azure and the Google Cloud. They have Kindle versus Kobo. They have Amazon Prime Video competing with Netflix and many other services. They have Amazon Prime Music competing against Spotify. They do so many things to help them compete in so many different industries all across the world. So I love Amazon for this reason. And when these are some of the older products that are already well established, we're going to go over some of the new plans for their future expansion that have just been made news to the overall market. A new industry that Amazon is now entering into is the health and fitness space with their new Halo fitness tracker. They announced this a few months ago, but has now officially hit the market, and you can purchase this and subscribe to their new monthly subscription-based health service. So Amazon is entering a new market. Now this product will directly compete with the Apple Watch and the Fitbits of the world. So this is a new fitness tracker, a very sleek band that connects directly to the Halo app that allows you to track your fitness goals. If we take a look, this band costs $99 and it comes with a 6-month subscription to Amazon Health Services. They launched this device in August, but is now fully available for everyone to purchase. Like I mentioned, this will compete with the Apple Watch and Fitbit, and this kind of allows you to have a comprehensive view of your personal health and well-being. And there's different tools to help measure body fat percentage, different activity levels, and sleep. And it's overall a traditional tracker. There's a ton of these on the market, and now Amazon's getting in with their own. And what they did kind of different was they have a very sleek design. No screen. All new fitness trackers on the market right now have a screen, and they do much more than just tell you your fitness goals. Amazon did the opposite. They made it very plain, focused solely on fitness. Another industry they're trying to get into, of course, is the Alexa. We all know their Alexa platform is growing and it's getting smarter and smarter every single day. But what they want this to be is your personal companion that you have with you everywhere you go. They want this to be everywhere. From every single device that you own, they want an Alexa device connected to be with you at all times. And right now they have reached over hundreds of millions of devices sold worldwide, and many more are coming. They expect it to be in speakers, laptops, microwaves, and other gadgets, and they want it everywhere. In offices, hotels, smart glasses, and cars, Amazon Alexa is the future of their AI growth. One of the newest markets Amazon is entering into, again, a new industry that they want to compete in, is that they have launched an online pharmacy within the United States. That's absolutely incredible to even think about. This tech giant has now made it even simpler for you to get your prescriptions. They have a new pharmacy set up where customers can order commonly used medications in both generic and prescription medicines. This pharmacy will allow customers to manage their prescriptions with Amazon Prime memberships and receive 1 to 2 day delivery for their medications. And doctors will now be able to send directly to Amazon Pharmacy services. And one very important feature of this new online pharmacy is the fact that it will allow you to price match. Amazon has said that this service will allow individuals to price match and save up to 80% off generic medications and 40% off brand name medications when paying without health insurance, which is extremely important. And they also designed the pharmacy to put customers first. Amazon is known for being customer driven and customer obsessed. They want to put the customer first, and that's what I think has allowed them to grow to this size. And they all know the pharmaceutical industry is very confusing. The whole process of getting a prescription filled, refilled is always very complex, and they're going to make it extremely simple, and I think that's going to help them set them apart. And the convenience of having it fully delivered to your house, have automatic refills filled, I think it's going to really help the company grow in a new market that they're going to compete in. And continuing on, we still have a few more different industries that Amazon has just announced they will be competing in. We've already taken a look at the fitness tracker, the Halo bracelet. We've already taken a look at the online pharmacy. And there's still a few more ways this company wants to diversify and compete over the long term. And right now, they just announced a new self-driving Robotaxi. It's called Zoox, I don't know how to pronounce that, Z-O-O-X, and it can travel up to 75 miles per hour and run for 16 hours on one single charge. This is the look of the new Robotaxi, and the future of autonomous driving is coming. And I think Amazon, because of their funds, the size, they can actually be a main player in this respective industry. And I think if this can actually become a real thing across some major cities within the United States, this will really help be a nice growth factor for their business as well. This Robotaxi business alone can be worth $100 billion at full scale. So they just announced a fully electric, driverless vehicle that's being built for ride hauling. It's a carriage style vehicle, which means passengers actually face each other and there's no space for a driver. Since there's no steering wheel, it can space up to 4 passengers. They actually acquired this company. It's a 6-year-old business, and I think this has the potential to really grow. If we move on now to another new industry that Amazon's going to compete with, I keep repeating myself, but it's true. They continue to dominate and grow and expand in so many different aspects of our daily lives. They opened their 4th location of their new high-tech grocery store called Amazon Fresh. Usually these opened up within California. They opened one outside of their home state, and Amazon designed these for a seamless shopping experience. Of course, these are the new no cashier grocery stores. You show up, you get a cart. As you put products into your physical cart, it gets tracked on your Amazon account, and you just walk out of the store and your account is charged for the products that you purchased. So it's a great new platform. Of course, it's still in the very early stage, but this is another future growth driver for the business. It's just crazy to even think about, like, so many different areas they're expanding into. And this is not even the end of the ones we're going to cover in today's video. If we move on to the next one, the streaming services. Like I mentioned, they already own Twitch, one of the best streaming platforms in the world. But that's not enough for them. They actually want to get in and host their own streaming service. So another industry the tech giant wants to get in is the actual cloud gaming service. They have a product called Luna. This is a cloud gaming service that allows people to play video games and stream them without actually having to download or install any games beforehand. And this can work on any Bluetooth controller, but they have also actually released their own version like we saw in this picture. So again, another way for the company to expand. I keep saying it, but I think this company hasn't even reached or hasn't even come close to their fullest potential. And I just want to really discuss that. And I think Amazon may be one of the best companies to buy into right now. So this were a bunch of new growth aspects for the business. We've taken a look at so many different aspects, so many different reasons this company will continue to grow. We have their online pharmacy. We have the Alexa platform growing in popularity. We have the Halo bracelets. So many key drivers for future growth that I don't think Amazon will be slowing down anytime soon. And I really do think we'll see a share price hit $4,000, $5,000, $6,000 per share not too long in the future. So this is my personal opinion on the company. Of course, in no way is this any financial advice. But in my own personal opinion, I think Amazon has to be the best growth stock you can buy right now. I don't really see anyone competing with them. And the fact that they have all these other businesses that are still in the very early on stage that are not even earning any profits yet. Once all of these other businesses grow over the next few years and actually become profit drivers, I think Amazon's earnings per share numbers are going to triple, quadruple, huge growth for the future of Amazon. I'm very bullish on the company, of course, in my personal opinion, but thank you for watching and see you in tomorrow's video.